This feels different for the ECB versus the Fed. Is that fair?
I think it's fair. I think, obviously, the shock is probably going to be larger for them, given their imports of oil and natural gas. Also, remember, the ECB has a single mandate. Their job is price stability. The Fed has a dual mandate. And so I think they are data dependent. I take them at their word. I don't think a hike is a slam dunk, but it's an option.
Is this a shock you should look through as a central banker?
My inclination would be to look through it initially, although the caveat, of course, is the last 5 years inflation's been too damn high and above target. So I think that's a case to maybe think a little bit harder about it. But my inclination would be to look through, especially given I think most economies, including the U.S., are at a point where if we do get a stagflationary shock, there will be a contraction in growth and higher unemployment, and central banks are going to have to factor that in as well.
Well, with the ECB right now, markets are pricing in a number of rate hikes for the remainder of this year. And in the past, there has been a history for the ECB of hiking in the face of an oil price shock. Do you think that would be a policy error that would send the region into recession?
I think it's a possible policy error. You know, you don't have a crystal ball, at least as a central banker, so you make those judgment calls. But you are correct. Both in 2008 and 2011, as I recall, the ECB was hiking when headline inflation went up for an oil shock, and both of those moves, in retrospect, did not pan out too well. So I think that could be on their mind.
Pimco recently put out a paper pushing back against some of the rate hike expectations in the United States, saying it's a little bit overdone given what the rhetoric has been and the dual mandate that we're facing. Do you think that a rate hike, that the bar is just so high that it really wouldn't happen, especially under Kevin Warsh whenever he gets in?
Well, Jay Powell was asked that question at the press conference, and I think he said again, as he did in January, that the committee's not really considering a rate hike now, and it's really not something that they anticipate. You do have some members of the committee, I think some of the presidents, who would like the statement at least to acknowledge there could be a rate hike. I do think the bar is high for a couple of reasons. The Fed is a dual mandate central bank. The unemployment rate is low, but let's face it, job creation's been virtually zero for the last year or so, especially in the private sector. And I don't think it would take much to push the unemployment rate up, and I think that'll also be a factor for them. So I think the most likely path is the uncertainty in the Middle East may put them on hold for a while, but I think eventually this will be resolved. It'll be in the rearview mirror, and I think at that point, Kevin Warsh, when he does arrive, will be inclined to lower rates at least down to the neutral level of around 3%.